Hello and welcome to our latest Money Show MoneyMasters Podcast segment. I'm Mike Larson, Editor-in-Chief at Money Show, and today I'm pleased to speak with Pete Najarian, one of the co-founders of Market Rebellion. Pete, welcome to the show.
Thank you for having me. It's great to be with you again. We see each other a lot these days.
Yeah, it's nice. It's nice. Good to catch up. Let's catch up on the markets here, right? I mean, we start at the big picture. Where are we in this whole sort of economy, growth, inflation debate? What do you see on that?
Yeah, well, we certainly have, earnings has taken over, but it never fully takes over because, of course, the big picture, the macro picture always has something to do with the Fed, what they're thinking, where inflation is and all of that. And we see it almost any time the Fed has a reason to get out there and give us some information. It's usually market moving. And I think that's going to be around for a long time. And it's become a bigger focus than it ever was when I first got into the industry. That's for sure. So it is interesting. I mean, today is a great example of, what we're seeing out of how the markets are shifting around on a day where, we've got huge earnings. We know about that. We know NVIDIA is a big name, but I think that the reality still is you've got the Fed, and the Fed is something that is very, very market moving. And if they just ease a little bit towards something, talking a little bit more about how sticky inflation really is, it seems to get people pretty riled up pretty quickly.
Yeah, I mean, what's the whole mob movie quote? Every time I think I'm out, they pull me back in. It's like, every time you think you can put the Fed behind you, they rope you back in, and the minutes that came out this week are part of that. So what is your thoughts on the Fed here? I mean, earlier in the year, you and your brother had talked about how ridiculous this talk of Fed is going to cut 6, 7, 20 times, whatever it was. Where do things stand now?
Well, and I feel good about pushing back against that 6 cuts, 7 cuts, and all that type of thing, because it just didn't make any sense to me. And especially because we know how data-driven this whole thing should be and is. And I think that's one thing about Powell. I've said from the very beginning, I think he's been very transparent. He's a smart guy. We all know, I think most of us think that. But the reality is that under certain circumstances, they haven't had the room based upon what the inflation levels have been and what the numbers are that are coming in, all the data points that they take in it seems like an almost everyday thing these days. But the reality is that looking for those cuts, we're still looking, and we're looking for September now. And that's the most likely month as of right now. And then, of course, we've got an election year going on. So past September, what happens after that? I don't have the answers. I don't pretend to have the answers, but I feel very confident about one thing. I felt confident that we didn't see the cuts that everybody else saw. And the reason behind that was how distant we were from that 2% that they've been talking about. We are still a distance away from that. So I'm still in the camp of maybe a cut, maybe, but I'm not 100% saying September's the month. And because it's been like the whole year. It's just not right now.
Gotcha. Well, let's talk about the markets, right? I mean, I think some of the April stumble was a little bit of fears of what's going to happen with interest rates. There was some other, pullback on, because I think sentiment was kind of getting giddy there, but we've bounced right back, right? So what are your thoughts on, can the market deal with the Fed? Can the market deal with some of those sentiment concerns? Where are you at on that?
Yeah, it's really interesting. And I think that the market, one thing that has proven out so far, and especially as of right now, I mean, April was a little bit of a different story. We had volatility that had moved the volatility index, call it between 16 and 19. I know that it got to 21, but that was there for about that long, but call it 16 to 19. But now we're back into a different category where we had been, which is closer 12 to 16, let's call it. But the reality is we are even been below 12 for the last few days, and that's going back to last Friday. So there is something to be said about where we are from a volatility perspective. It shows me that as of right now, there is a level of comfort. They're not as, we're not as ready to jump as we were before. And I think that's very important. We've also seen volumes in the market, specifically the spiders. I mean, the volumes have dropped dramatically. We're only trading at about 50% of the normal day or the average day for the spider. So that, I think, is something worthwhile. At least keep that in your back pocket as some knowledge of that. Volumes have come down, and we're seeing even the volumes in the option market. We've been averaging about 48 million per day this year, and all of a sudden over the last, I'll even give you the last 3 or 4 days, we're somewhere in the upper 30 million area. So we're significantly off there as well. I don't know exactly if it's that people are just trying to sit back and wait and see what the Fed might do. And also some of the earnings that are out there. As a matter of fact, this week, obviously, NVIDIA being as big as any earnings that I think anybody was looking at this quarter. And, it's all about AI. And we all talk about AI every day. And obviously, during this last earnings season, if you just mentioned those two letters, you probably had somebody get pretty excited about your stock.
Yeah, for sure, for sure. I know we kind of have to talk around a little NVIDIA a little bit, but let's look, not just NVIDIA, some of the other names out there, the other semis, the other, Mag 7 names, kind of that term sort of fallen by the wayside now. But, what else are you seeing in the earnings numbers out of tech, and where else are you seeing opportunity maybe outside of the big behemoth everybody knows about?
Yeah, well, that's a really good question. And I think one of the things that I always like to do is when I'm looking at the markets, it's never about just one stock. It's never just about Apple. It's never just about Merck. It's never just about, in this case, NVIDIA. I think when you look at this, you have to look at the bigger picture. And when I look at the bigger picture and I see something like AI and how that's really taken over, and we've all been kicking it around, we've all been talking about it. We know about Google, we know about Microsoft, we know all these companies that are moving further and further and at a faster pace probably now than they were even 6 months ago,
Sure.
Trying to build out this whole AI thing. And I think the one thing that people are kind of missing out on is it is an amazing thing to see what AI really does draw and what do they really need to be successful with AI. And a lot of it has to do with even names like Micron. You're looking at memory, right? I mean, you look at a Western Digital, you look at Seagate, you look at some of these names. They all have some sort of ties that actually are needed and very big needs for the AI world. And I'll even throw out one that nobody's talking about, which is energy. The energy that it takes for these data centers is, and I'm not talking about names like ExxonMobil and Chevron when I say energy, I'm talking about different names that I think are a huge part of what we're going to need if we're going to have all these data centers, the size, the mass, the pull, everything that goes into that. It is going to take incredible amounts of energy to be able to run that whole thing. And so because of that, I've been looking more and more into that side of the world. And I think if you look in this past week and you look at solar and some of the other areas, some of the alternatives to things, we are seeing huge jumps right now in solar. We are seeing huge jumps in other different areas of energy that is going to be needed, and they're going to be having to tap into that because of the fact of the huge draw that AI really does make. And I think if people just look into that a little bit more, you're going to find a lot of different names that you can maybe start to use or at least look at as you're trying to navigate your way through the AI world.
Well, it's funny. We all think of utilities as kind of this boring, stodgy sector, but the other day when I was looking at it, it was the third best performing year to date of the S&P 11 group. So, I guess that's got to be at least partially driven by that, right?
Absolutely. And the utilities have been on absolute fire. I'm glad you pointed that out. I don't think enough people pay attention to that. It's probably mostly because it doesn't get talked about, number one, but who's thinking about that? You are, I am, but I don't think there's a lot of folks out there that are really taking in this whole idea. I think there are still people out there talking about the Magnificent Seven, which is ridiculous because there is such a bigger picture out there of stocks that are moving, stocks that have hit either 52-week highs or all-time highs. We all know about the NASDAQ. We all know about the S&P. We've seen the Dow get over 40,000. There's been a lot of different records set this year, but I think that what gets lost in all of it is everything that you just said when you said utilities, because nobody talks about that. They all talk about, well, these semiconductors over here and the financials. And by the way, I think the financials are a very, very interesting spot right now, because when you go through the earnings cycle and we look at what's going on, and I've been talking about this for a while now, but the investment banking side of the financials is something that I don't think enough people have been really focused on. And if you look, some of the names that have a very big presence there, boy, do they have some great results as well. Take a look at Goldman Sachs, all-time highs. JP Morgan, up over 200 not too long ago. It's been bouncing around ever since. Depends on what Jamie Dimon talks about as far as how long he's going to be around, but as far as the CEO. But, Citibank, there's a lot of different names out there that, because of the presence that they've got in the investment banking world, that's where there's great margin. That's where there's a lot of gains. And I think that's something that's been overlooked by many people who are missing out on this whole thing. I'll throw Morgan Stanley in there as well. But there is a lot in the financials right now that is telling me, hey, look, this isn't over. Some of them are actually still pretty cheap. I still look at what I trade things on the financial side is price to book. Usually people hear about PE, price to earnings. I'm looking at price to book, and I've always looked at it in a different way than most people, but JP Morgan, it's 2 times price to book. So is it a little bit overstretched? Probably, but they are so good and so big. I think it's worthwhile to just say, you know what, they deserve to be there. You look at Citi, their price to book isn't even 1 yet. So this is one of these where I think that you've got to look around and just try to see where is the opportunity in this market, because there's always opportunity. And I think right now in the financials right now, because of the investment banking side, I think there's many names that people could select.
Okay, great. I mean, I have to touch on the topic because a lot of people are out there talking about it, and that's commodities. I mean, whether it's gold, silver more recently, copper, and so on. What are your thoughts on the runs we're seeing there? Is this something that's going to continue in your opinion?
Well, I think it's one of these things where people are just always looking for something else, right? Maybe something that's a little bit off. And in some cases, absolutely, the demand is there. Now, gold, that's for the folks that really are focused on gold. Silver might be a little bit different because there's so much of a draw for silver. When you're looking at the semiconductor world, there is a lot of a demand there. But I also think that when you look at others like copper is a lot of it has to do with the demand, and is there enough of it right now? Are they able to get enough of it? Is there something holding it back? And I would say the same thing about names, other parts of the commodity world like cocoa, where a lot of folks just haven't really been paying attention to some of these things. But it's been amazing to watch what some of the commodities have really done this past year. Some of these names have absolutely exploded to the upside. That doesn't mean that's going to be there forever either, by the way. I mean, you've got to be very selective, very careful if you're interested in that side of things. But certainly when people are starting to see maybe the markets are a little bit in front of themselves, they start to move over. Maybe they're in the commodities. I think commodities have now started to get a little in front of themselves. Maybe we switch back towards the markets.
Yeah. The time we have left, I mean, obviously you guys are well known for your options education and the things you do there. What are you seeing with players in this market, traders in this market? I mean, we kind of had a taste, a little bit of that meme stock thing coming back. I'm just wondering if there's any, is there a cautionary tale here? Is there any advice you'd pass on to people that are trading in this marketplace?
I think that the biggest thing that John and I always preach to people is discipline. I think they've got to understand when you have some incredible gains, which literally we are seeing almost on a daily basis. You mentioned the meme stocks. When you've got some of those gains, you got to take a little bit off, don't you? People ask me all the time, well, how do you know when? And I think you do have to have a game plan going in, but everybody's going to have a different pain threshold and everything else. But John and I have always talked about, hey, if I've got something in there and it's $1 that's now $2, if I take off half of that, if I bought 10 of them and I take off half of that, now I've taken all my money back off the table, right? So I've got an opportunity there. Do I want to keep riding it? And then you have to make those decisions. But there's a lot of different ways that everybody will approach it. And the meme stocks have been one thing for sure. And I've been focusing more and more on stocks when I see them really starting to move and wondering, gosh, what's the news behind it? It's not that good. What's the story here? I start looking at what is the short interest. And when you start to find some of the short interest, oftentimes in those meme stocks, that's exactly part of the deal is they are squeezing the shorts. And those shorts are starting to feel it. So they start to have to grab some of that stock. That's pushing these things and causing a lot of this craziness that we're seeing in the market right now. But I do think that there's a lot of different parts of the market that people are missing out on some of the opportunities. And I think you just have to be a little bit more involved and understand, especially when the volatility index is, like I said, in the 12s, it gives you an opportunity to get into things at a little bit of a discount from where we were even just 3 weeks ago.
Got it. Well, last question. I know you're going to be joining us for the Money Show Masters Symposium, Las Vegas. It's going to be in August. And this year we're doing a special All-Stars of Options trading event. So anything that maybe a sneak peek you could give as far as what you're going to tell attendees there and what's maybe an important takeaway or two for this market?
I would just say this, the most important takeaway that always exists for John and I, and specifically with me, because I've always talked about this in everything in life, but particularly in the options world, it's just discipline. I mean, it's great to be there. It's great to be sitting at the tables, whether it's in Las Vegas or in Florida or wherever. But when you're sitting in front of your computers, you've really got to have an actionable plan of attack and be disciplined about how you actually execute that. And I think that's probably more important than almost anything else that I could say, because it gives you that opportunity. The opportunity is there. And when the volatility is low, the opportunity gets a little bit better because you have that opportunity to buy things that are maybe a little bit cheaper, but you still have to have a game plan. You still have to have all the rules in front of yourself each and every day to remind yourself, hey, look, I need to sell this when, and everybody's going to have a different answer. But I think it's something that everybody has to approach with a disciplined side of things, which is, hey, look, I don't want to get out there in the stock that's gone up $10, the options have gone up $2, and I don't do anything. And the next day I wake up and it's all the way back to where I started or worse. That's what you don't want to do. So I think discipline's probably the most important thing.
Yeah, well, Pete, thank you so much for your insights. Viewers, if you'd like to learn more from Pete, he is going to be joining us for that Money Show Master Symposium. We're running August 1st to 3rd at the Paris Las Vegas Resort. You can find out more by clicking the link in the video description below. Don't forget to like this video and subscribe to our channel to get more updates like this. Pete, thanks again for joining us. We'll see what happens with NVIDIA and some of these other stocks in the days ahead.
Thanks.